Traders, it's your boy the Father Key, guys. As usual, we're always here to learn forex trading, guys, for free. By the way, this is our Telegram channel specifically for studying about forex trading. We analyze for the previous weeks and we analyze for the current week as well. So I normally share the link in my public channel so that those that are interested in learning forex trading, how to analyze the simplest of analyzing the market, they get a chance to join. They get a chance to join us. When they join us, then they'll be able to get something new. Yeah, so we're gonna analyze like normally. I remember the guys that I have in this channel are basically for studying forex trading. So without wasting your time, guys, we're gonna look at some setups and get to know. It is very good for you to analyze or to make a setup, and after making a setup, you'll be able to get at least 100, an average of 50 pips. After making the 50 pips, then there you can call yourself that a setup with deco. Setup with deco. So kakati, I normally prefer analyzing the market with my guys here. Remember, this channel is very free. Totally free to everyone. We analyze, we study from there. Okay, Kati, normally we analyze XAU. We start off with XAUUSD. That's my pair that I always prefer to analyze for people because it is one of the trickiest pair to be analyzed by the majority. So those that attended the previous week, you remember the setups we had. We had talked about the week where we expecting the market to go. But unfortunately, we don't have all-time high, indicating that we don't have the current, we don't have the previous data, but what we have is the current data. If you remember very well, last week, we analyzed the market. Last week, we analyzed the market. If you remember clearly, we were targeting this switch. Unfortunately, we say that we can now mark the zone below, if you remember, for the previous week. So those that took the analysis, I'm sure they were able to make some good money from trading and were able to make it. So even the same thing you're gonna do now, what we have is current data. What I can only say is that where we see gold right now, gold is having what we call the all-time high. So we don't have any previous data according to the price action of analyzing the market. We don't have any previous data of analyzing gold. Even if you go to, let's say, 3 months back, you want to find that gold is having, that's now the high we have. So indicating that we are looking forward for us to see, shall we have some buys, because the market now is having a lot of imbalances. It's having a lot of imbalances. So what we mean by the imbalance is that the structure of the market is very simple. The market has to move either uptrend, downtrend, or the consolidation format. So this is now giving us an uptrend. But if you see the structure moving up and giving us back some moves, moving up and giving us back some moves. So we always expect the market to have the same thing. Now this is now giving us the bearish trend. Then from there we're having a consolidation trend. Consolidation trend doesn't matter as long as the market is in that range, moving up and down, moving up and down. Those that have been trading before, when I talk about that, I'm very sure you know what I mean by that. Okay. So, kakati, because where it is right now, it is the current move. And as a forex trader, and the momentum, if you have to consider, you can see the momentum we have. The momentum go toward there as I speak. The momentum is very, very, very huge, indicating that we still have some more chances of the markets to give us other buys. You get my point? So at first, we were fooled by this move. If you remember, this was the recent all-time high we had. Now it has been violated by another strong candle with huge momentum. And there is a momentum or one man violating. So indicating that, I don't know whether my guys in the Telegram channel you're following. You remember, this is something that is free. We're just discussing. I'm analyzing gold. Then we discuss it. Then you give me your pair, I analyze for you your pair as well. Okay. So as I was saying that, I was saying that this was the recent high. There, where you see the purple circle, it was the recent high. So right now, hasn't evaluating this recent high. The current move, the current move is having huge momentum wa amaanyi. So you need to be considering analysis. You have to consider all those things. So this is the daytime frame. We're analyzing for tomorrow's food or today's food. Twagala kumanya omuntu abanga agenda ku tradinga. Ngogenda ku tradinga. Ngononya some good food. So I'm marking this one as my low, and I'm gonna mark the winch of the other previous high, the previous high that we had. I'm gonna make it to be my rejection point. Now I'm considering it because I'm expecting to have back again the buys because the market is strongly buying. Okay, the market is strongly buying. So you are dealing with those two lines. We wanna know where are we really going? Okay. Let's make the candles to be very big so that we know what we are dealing with. So this line here, as you see, the line, this candle with huge momentum to violate this one. Now we are expecting if the market is to have some buys again, the actual thing would be for it to come back and retest this switch or the other one. So we have this one, number one, then we proceed back upwards. If not so, because the momentum shows that you're supposed to be buying, okay? That's what I'm saying. So if not that one, then you're going to consider this one, which is the another high that we had. Again, we buy, okay? That's what you are looking for. You're looking for buys because the market is strongly in buys. It's called a bullish trend. But this week that we are starting, we're having a lot of bank holidays. At the same time, on Friday, we shall be having non-farm payroll, that is NFP. So you must be careful trading. So you're going to mark even this candle where it stopped. You're going to mark it. You're going to consider it because it's the current data we have. Okay, it's the current data we have. So as the procedure goes on, we proceed to the lower time frames. We normally proceed to the lower time frames. The more you go to lower time frames, the more you'll be seeing the market in another way. Okay. Remember, this one here was the previous high. Now, as I speak, we have this one as our current high that we have, but with huge momentum, leaving a lot of imbalance behind. So indicating that we are looking for buy. So this is what I was saying. If you look at the 4-hour time frame analyzing gold in the physical way, don't use indicators if you want to learn. If you want to learn trading, always avoid using indicators, guys. You bring in the indicators where necessary. Okay, so that's number one move. Expect. Why am I saying so? Because of this rejection point. That point has a lot of rejection, so I'm expecting it to be respected. I'm expecting the market to respect. If not, then here that's when I'm gonna add in another line. Someone says I could add this one. I could add this one because if you use price action, those two areas have been retested more than 2 times. Okay, they have been retested more than 2 times. So I'm gonna mark the near one. I want the work to be neat. I'm gonna mark the range. You can mark the range. You can mark the upper range. Okay. So from there, we shall have this expectation as well. This is what I did last week for my guys in the public channel. So these are my expectations on God. That's, remember, for our time frame. Okay, so all those are expectations, but you have to still analyze until we go to 30 or we go to 30-minute time frame, so as that we can be able to know that today I'm taking trades, today I'm not taking trades. Remember, the week is full of bank holidays and whatever, and this is gold. This is gold. So you must be able to know where you're going. We're having a lot of pumping in the market. As I speak now, gold is having the all-time high. So I'm having now 2 lines. I'm having this one that I've added in. I've just added in this one because this is where the market reversed. It was the move that we had. If you can see very well, this impulse, the impulsive move, then back downwards retesting, then again they come back retest this area, falling out traders with the small moves. Then from there, it never came back. So we have expectations of expecting the market to return back from here or to come back here, this level, be up or below. But from there, then we shall have to go back upwards if it is to buy. So when do you confirm that the market now has changed the direction? You should confirm that the market has changed the direction. Now here, that's when you bring in your other strategies like SMCI cities. You can consider them. You can consider them somehow. For them, they say that whenever the market is having a one-sided market, always wait for the change of characters. Okay, but you know that thing, you manage with that change of character. So it's what you could wait for you to confirm that the market now has changed from this direction to another direction. Okay, so as in the impulsive move, for us, we have a rule that says wait for the market to go out of the dealing range. What is the dealing range? The dealing range, this is where traders are still dealing. They are still analyzing their money. Should we buy? Should we sell? Should we buy? Should we sell? So after them deciding that now we should go in for sales or buys, indicate that giving us a one-side market. So we wait for the move to go. Don't trap the move. Then when they come back to test the entry, when they come back to test the dealing range, because it has to come back to respect it, to retest it. So that's when as we go in the market. Okay, that's the rule we use in the impulsive strategy. I don't know whether guys mulitegeera. So katwina na kale kali one sided twagala kumanya tugenda kuviramu tugenda kuyingirirawo, and then where are we trading? That's why you go on piling up the market with lower time frames. The more you go down, the more you receive, the more you see other charts. You first make the chart to be very clear. So this is what we are seeing. We have this move that gave us a strong buy, but remember these are still higher time frames. These are still higher time frames. So remember current in a stronger buys. So what we want to go down for sales so that we can be able to predict where to buy again from, or you can leave the market to sell and you buy again. Even that one is there. So abali trading zeko market structure nga trading higher highs, lower lows, higher highs, lower lows, swing low, swing high. You know those things, You know those things. So the same thing you can see here. The same thing you can see here. Ups and downs, ups and downs, ups and downs, ups. So even here, it is the same thing that they have to come and give you back the ups and downs. So for this one, they might even stop this rejection, then they proceed back upwards. If not, so they can even come back to these levels downwards. Then we sell off. Okay, so you must be so observant when you're analyzing the markets. I'm not adding in lines on 1 hour time frame. Now I'm looking for food. If first even you can remove the other ones. Now we are here. We mark the highest of the current move after making a chart to be like, now you see when you open your screen, you can see the all chart. Okay, you mark the highest. Remember, you don't have the previous data, so someone could come and mark this area, which I could make it to be valid, or you can come and mark below the which I could also take in that, but that is very far. So I'm gonna mark this wedge because it's near. I'm looking for tomorrow's food. Remember, it's a Monday. I want to trade, so I have to be counting with the moves reach there. Remember, the week we are entering, we have NFP. I think you see that's quite too much. It's very far, and we're having a one-sided market as well. So we're gonna make those ones. We're gonna make those two to be our strong zones. Let us first refresh the screen. This is what we have. So if this is 30 minutes, then I have to get another one where this is where I look on my screen clearly. I could see this one is the lowest, and we're having another lowest downwards this way. So this is a lot of money that we have here. It that has to be swept. Some other traders will call it liquidity, the so-called liquidity. So you put that one there. Normally on my short, I like them to be dotted, indicating how weak they are. Indicating how weak they are. So these lessons are probably free in my Telegram channel, and whenever I'm analyzing the market, I always consider winches. Personally, I consider winches basically because winches indicates that the market has ever reached that, or the price has ever reached that marked area. Okay, so if the market has ever reached that marked area, at any moment it has to come back to that marked level. It has to come back to that market level. So now the problem we're having here, the market is one-sided. Now everywhere we look on gold, we are targeting sells. It is giving us, it is in our sell areas. So what you're supposed to do is to wait for the opening candle. It will always give you the direction of the market. As long as you are not a gambler, you know, some traders, they tend to trade for margin. You end up losing money in just one trade like this. So that's being unprofessional. You might be unprofessional, but still the way you trade, you make yourself trade, then you turn up to be a professional trader. Okay. Yeah. I'm seeing people tapping my screens on my TikTok, guys. But having this lesson is very live in my Telegram channel, guys. Thank you for attending. I'm seeing Sharif FX, Rahim, Hassan, Yahi. Then have the Michelle, Kemichi, we have Jonah FX, Adam ZD. Guys are attending there. I'm having a private group for studying, and I'm having a public channel as well for everything, my entries, my whatever. So this is the short setup I can give on gold, and if it is not violated, I'm very sure we can consider it. We may consider it for the coming week. Those that are willing to trade, we may consider it. So let me show you what I mean now here by drawing this. Before I show you, we have a rule that says that whenever the market closes above or below the market area, we shall always target to go in for buys. Whenever the market closes below, we always target to go in for sales. What do we mean by the market closing? What we mean by that is that whenever the market or the candle close, like now this one closed. If you see this tall candle here that we have, it closed above this area, indicating that we had to go in for buys. Let you look at this candle. It gave in the doji candle that we are having here, the inverted hammer. It gave us a very strong move. That was the recent high we had. Then it sold off with a strong candle of selling, but they had to sit on this line, the lowest area. Then, of course, we had to execute trades from here, targeting that one, and we moved upwards. That's how the rule works. So it means that the entry was supposed to be there, below the winch, below this winch, these 3 winches there. Then you have to put your buys, you target long. If your target was there, then you would have made it. Even you can minimize the stop loss as well, because the market did come back to the zone. How many pips that we were able to capture from there? Those who traded last week, I'm even giving all the search signals in my VIP. I think you can see over 1,000 pips. So guys, you must be careful analyzing the market. Always, whenever analyzing the market, don't make things to be hard for yourself. You always trade what you see. Okay? Always trade what you see. So normally this is how I make my setups, and this is how I'm able to get sniper entries, guys. All those are asking where do I get the snipers from, and that's how I make my setups. Then I name them even. This is expected. I can put that one. I can make it to be expected sell area, and even you can make it to be a strong one. But still, since we don't have the previous data, you can't say it is the strong one. Okay, you can't say that's the strong one. Expected sell areas below. Someone wants the rules. I'm gonna say it again. A moment. Below expected sell area below. Those are the setups that I give. Those are the setups that I give normally, and those that have been following my work for now 2 years, in my public channel. Now you can find them drawing there something of the same kind. Then you have the expected buy area, expected buy areas above. For this one, even you can make it to be strong one because you have the previous data of it. You can say expected strong buy area above because you have the data about it. Then these dotted lines, I said me personally, for you can change colors, you can use anything you want, but I personally, I make them dotted basically because they can guide me. They can remind me that this area you are trading is at a low risk. Why? Because low risk areas, they can be violated at any time. Low risky areas. Yeah, that's how I do my setups, guys. Now that's gold. Those that are in my lessons, my lectures, kindly now I want to know your view. What are you saying on gold? We discuss and get to know. So this is the setup. That's how it looks. Very simple, clean, and neat. 30 minutes. That's where we're gonna execute our trades from. Normally, why do I go in for 30 minutes? It's because whenever you trade on higher time frames, chances of you being manipulated and liquidated are low. It's very hard for you to be liquidated when you're trading on higher time frames. Okay. So someone asked me about the rules. The rule says that whenever the market closes above the marked area, as example, I'm taking a circle. This was the entry. Where is the winch? I put the purple circle there. Whenever the market closed above, this one came in and it had to go. When this sell came, this sell that you're seeing, it came and dropped on our line, indicating that now we can go in for buys. You see? Then if the market closed, the candle closed above this weak line, the low risk area, it closed above it, then you have to go in for buys. Are you seeing? You had to put the stop loss towards this zone, this one here, the range that you had there. You have to put it below it. Considering price action is also a key in being profitable in trading. Consider price action whenever you're analyzing the market. Consider it. You'll make some good money. And always don't get worried of asking or consulting. Do consultations, guys. There are real traders there outside there that want to see other traders being successful. So you can see the pips you covered there. And remember, this is a 30-minute candle time frame. Over 2,000 pips. Okay? So that's how we analyze the market in my channel, and that's how things are very simple. We don't have such terms that have the anticipation, those terms that your traders, your mentors there that use. No. We don't have them there. We just have to analyze the market according to the way we see it. Then those that are using indicators, let us first see. If I'm to use the Fibo tool, let us see. This is the that I'm having. If I'm using the Fibo tool, where should I expect where should I expect the market to retrace from? So you have to put it here. It doesn't matter the way you put it. We mark the highest and the low. We move. We want to see. I think you're seeing, but remember, this is gold. This is gold. The reason why I have not marked this area where the market has marked, your indicator puts the sales, the 0.5 level. The reason why I have not marked it, because it is in the middle of the move, like eri wakati wa kutambula kwa katale. So sisobola kuteekawo entry yange nengamba nti nsubira akatale okujja kampesente kweyo level. Okitegedde kizibu lwaki eno wali low risk area tulina what we call liquidity. Aba trading SMC mubimanyi ebyo. SMC ICT tulina liquidity there. So kizibu akatale okujja ne ka stopping at this circle kajja kujja kale kasobola kikola batya nti it will come in and give you a strong candle, the impulsive move, emale yambule candle, ekitegeeza waneberesewo winch, that winch egenda kujja sweeping all this money we have, then from there it goes back upwards. Then after doing that, remember this is gold. So kuba candle ngeno ngejikuba from here up to there. You can count this candle. Candle emu yokka eri mu pipu nga 15 asatu. Oshegera. So ezo chikbawaneno nemare damle buyinga strongly. Oshegede. So that's why I don't normally use indicators. Indicators are you take away just to confirm, especially on this one-sided market. That's the setup we have. For those that are targeting to trade, but you can use it. Telegram channel, you are missing out a lot, guys. The link is in my bio. So my traders on the live, I'm seeing Hans, Hassan, Sharif, you can tell me your view. Unmute your screen and give me what you say on gold.
Assalamu alaikum wa rahmatullah.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Mwasizem chamwena everyone morning. Like chama jagala okugamba. If you look into your first low risk area and go vertical expected sell area above, below, sorry. Olaba like kando yageze ne sweeping at that liquidity. Jitwabadde nga tulinanga wichi yafe. Can't you mark that point, Nogamanti? It will be the entry zone where we come no refining it down into the 15-minute time frame. Kwa walinga wali order block.
Yes. Chogera chitufu, Mr. Sharif.
Kubanga like olabe no low risk area just so take out ojitadde onge tulaga nti we abadde kale we yafunidde momentum buying again okusobola breaking the other liquidity ne mu sweeping. Kati wemba ndi wakuddamu ku refining back kale nga njagala kufuna mo entries nze ndowooza nenvaako ku 30 kuba ku 30 minute endaga nti sisobola gifuna like temper clear entry kuba mba nina kulinda ate sweeping that liquidity gotulaze ekyo kituufu like for sales netulyoka tuddamu to buying kuba nze wekitunudemu
kati ekintu ekyo ekyogera kituufu. That is for traders bali mu trading SMC, like traders that are trading lower time frames. Sharifu, oba manyi strategy tuli mu trading sir. Let me show you something here. Let me use this space. We have a change. You remember we have very many strategies, but us with my bro we decided to call our strategy to be the impulsive, and others will call it what you want according to what I'm gonna show you. Why we call it an impulsive strategy? We always have what we call a dealing range. Let's assume this is the range. I'm going to show you what I'm talking about. Then you tell me what you see. On my live stream here on TikTok, someone said that I'm always sharing results. I'm always having these free weekend lessons. They are free. And you, Muhammad, you have just joined the channel. I think that was last week. But that channel has been there for over 2 years. They can tell you that. Okay? So, this is the range we have. Let us first put it there. I'm answering you, Mr. Sharif. Let me know if you're looking at the screen. Sharif, are you there?
Yeah, I'm there.
We're having a range. This one it is called a dealing range. Why do we call it a dealing range? Because we're having traders that are buying and selling. Okay? We're having traders that are buying and selling in the same area. So indicating that the price is not moving. Consolidation. So what do we mean by impulsive move? Always, as we shall wait for this. Let's assume they have decided, according to the competition that we're having there, I'm buying a very strong. Indicating how this is the impulsive move we have received. So as a trader, me, I would not take a trade from here. I would. No, because the rule says whenever the market is closes above, this one closed above the market area, indicating that you're supposed to go in for buys. But as a trader, you're not supposed to do that. Always wait for the market to do this. Because it has to be done. It has to be done. They have to come either against this area or here or here. There are 3 areas there we can consider. So let us first consider the 50%. Then this is now this is supposed to be the entry. Then you move upwards. That's number 1. After having the dealing range, we mark that one. So we have what we call the 50% of the move of this range. The market can come and give you to that level. If not so, they can give you even, they cover the full range. They cover it out. What do I mean by that? Remember, we already have this green move is the impulsive move we have received. I want to show you where the name comes from, the impulsive move. So that's the other move we have. So even it can come and does this from this level then you go back upwards. You get it? Again, the same thing. Again, the same thing. You mark it. Remember the green candle indicates that this is the impulsive move received. So we have 3 options. You always have 3 options. One of the 3 options has to be accurate. One of the 3. Okitegera nti akatale kajja kujja kaba kamaze to confirming okumenya no range ne bagifuluma this range you see bamalo gifuluma with this strong move kitegeeza tumaze funa direction ya katale naye of course kaino okuddamu kadde wansi kapikinga amanya Sharifa mkozesa luganda obitegeere okitegera kajja kaino okuddamu okufuna some energy nga kiri kyonyonyodde ku 30 minutes time ngenda kuwa kaino okujja katekemu amaanyi then from there we have to go by all means because that's how the market moves. Wabanga wasoma bulungi trading. Now you really give in your time and you sit down and also oja kutegeera why I'm so sure that the market has to come back and retest. If it doesn't retest, there are a lot of things there. Tuyinza tuyita nabagenda trapping a traders, sweeping off liquidity. The market can come and sweeps liquidity upwards, then it goes back downward. Then it what we call the change of character, indicating that we're having some changes in the market here now, turning from a bullish trend to a bearish trend. That's something else. But I'm talking of this. Whenever you see some moves of that kind, those guys that are using Falcon strategy, they can call this one to be. Let's assume that the market started from this way to this level. They'll come and say, this one is a flag, this one is one. So, no, guys, things don't work like that. We normally use those things to confirm, the chart patterns, the whatever. We just use them for confirmations. You get it?
Oh,
What is the possible? Because some cases, no retest after breakout. No. Nowadays, the market, we're having wars, we're having how do you call it in English? Do you know more like akatale kafe kano nga otumya gold yono gold yalimuvu gatatambulya ku prices yambo okimanyi tojja kusanga gold, you will find gold buying and the DXY index is also buying, but other pairs always respect the indexes. But we're having wars, we have some wars. So due to wars and some financial instabilities in the economy, they lead such things to go, because we are dealing with data here in forex trading. We are dealing with what? With data. So kati oyagala kurifininga muganda wange Sharif, kyolina okukola ojja ofunza tukozesa methods ezimu. We use the same procedures. Bwekyokola ojja ofunza until 5 minutes. I personally that I'm speaking to you is gola bayogera hours in. I trade Nasdaq, that is NAS 100. Normally I take my trades in 5 minutes and I analyze the market on 30 minutes. I expect to have some good respected setups in 5 minutes. You might have been seeing that. So you refine from the daily to 5 minutes. But personally, I'm teaching publicly. 15 highly manipulated. Those are time frames from 15 to 1 second. They're highly manipulated. There are more chances of losing money trading from those time frames. But still, there are more chances of making some good money when you're trading in other time frames.
And kitegeeza market, it has to first come and do what chetuyinza oyita stop hunt, like neja nesweepinga that liquid nebange retestinga either on the 50% wetuba tukozesa Fibonacci tool oba switch negiyitako katono.
Owagala kukozesa Fibonacci tool, kano katip kankakuwe. If you want to use a Fibo tool, especially when trading a gold over those indices, targeting a 0.6 level. 0.5 jireke, because it highly known. The market makers know these things. Bamanya ati kati bonna abantu bagenda tunuulya 50% of this move. Wekachoba okola targeting anga 0.6, targeting a 0.5. Oja beera able to get some good sniper entries, because akatale kituufu kakagenda reversing era ku 0.5. Okitegedde Sharif, naye kajja kuba kando eyo kando gye kagenda okuba winchi yake gena best stopping mu 0.6 oba kuyitamu katono, then the body will always close in 0.5. That's why you know what I denga line graph. Whenever I put the line graph of this kind, ojala this line graph yonga wewe kulaga nti fibo tool enagitaddeewo yakomye mu 50% of the fibo tool okitegeera but the winch winch oba otaddewo kando yenyini teriyo kando zetukozesa ojja kwesanga ngayo winch yatuuseeko mu 0.6 Sharif
Okay, kitegeera. Kategeera. Anedda.
So pia sijoyagala tukoleko analysis sebo ekitiibwa Mr. Sharif.
Pea gye nandyagadde mpozi GBP-JPY.
BPJPY. Okay. Rahim, I don't know Mukono Rahim. I want to know what was your question, Mr. Rahim. I don't know whether I've also just answered you.
Yeah, assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Kakati nze suggestion yange eri nti for gold your structure yayo even on H4 eri bullish nga liquidity ayinza okubeera swept between the low risk areas kweyo swing point. So expectation yange nti no singa market eba ekkiridde awo tuyinza okweyongerayo waggulu wakati omwo between the low risk areas.
And kati ekyo kyogera kituufu naye remember nti kati akatale kali one sided era if you have been following from the start I have been telling you that we are having a bull run whereby we are expecting buys. Kati kino kyetubadde tukola what we have been doing we are trying to know to figure out where should we expect to re-enter from if I missed the buy and I'm not having a running trade over the buys on gold. So where should I expect the retracement to be so that I could buy again with what? With the market. Because long term we are buying. If you look at the daily candle, it is having a huge momentum, indicating that we are strongly buying. You get my point, bro?
Yes, sir.
Yeah. So that's what I'm saying, that lines of demo, those are the levels that we expect the market to buy again from. Unless when they have respected the other rule, which rule that the closure of the market below the marked areas, then that's when we can go in for sales until we expect the market to reverse from strongly giving us some buys. So Monday, we shall look at that Monday, Tuesday, Wednesday, Thursday. Then Friday we shall be having NFP. If NFP is to sell, to have some strong sales, just expect the market to cover at least more than 3,000 pips on gold. Yeah. More than 3,000. You get my point? 3,000. Yes, I mean it.
Yes, sir.
So, that's my say, man. So, any other question, Mr. Rahim FX?
No. Yeah, I think I'm covered.
You're covered. So, which pair do you trade normally?
I trade USD JPY.
So, should we analyze for USD JPY or you are good?
We can analyze. You can analyze it.
Okay. So someone here on my live TikTok is saying that GU and Euro USD, yeah, those guys are moving the same. We are looking for the massive moves. We don't know when the moves are coming, but I'm also expecting to have some sales, by the way, on NFP. I've used the word expectation, expectation. So don't get worried seeing me selling strongly, buying strongly on buying strongly on NFP, and you say, man, the guy told us to sell and is buying. Hey, you know that's how Forex is. I don't move the market, guys. We anticipate. We are just anticipators. If gold is to sell, it should cover 3,000 pips. Why? Because it is NFP. Do you know what we call the events? We have two different things in Forex. We have what we call the economic events and what we call the economic news. Okay, so those that are using the Forex Factory, I don't know whether I have it here near me. Let me first check. If you check on Friday, if Mr. Tandol, whatever if you check on Forex Factory, on Friday the coming week, it will be 5th of Friday. We shall be having NFP, that is called the non-farm payroll. So always we expect to have some good moves. If the market does that, that will only happen if the market is to have one direction. But if it is to have two directions, then expect some liquidations of different accounts Okay, so why do I say that 3,000 pips? Because normally, if the market is one-sided there and it decides to change the direction, then always expect, if you are trading gold, that is to gold, always expect to trade such pips. Either you can hold. Those are the guys that you see that live in the first world country. They're making money because they use higher lot sizes and they give in time to hold their trades for a long period of time. So they end up making some good money. And as the Ugandans, we can't make some money basically because we run early, we aim at flipping accounts, we want to trade like trading bots. So we end up losing our money. Okay. So someone is talking about the DXY. DXY, we shall analyze it later. So I'm going to now to look at USD JPY. We are looking at USD JPY. Those that are willing to join the Telegram channel, guys, the link is in my bio. Tap it well. It will take you direct to my Telegram channel. Okay, so let us go in for now for the buys for USD JPY. The problem with the JPY pairs, they always also have want to move the one-sided markets. They like it so much. They like one-sided markets. So this is the setup we had made last week. We have been learning on this setup clearly, and now we have been able to make some good money. And by the way, those that attended it last week, the setup is still valid. Let me even see whether I can use another pair. I can use another USD JPY. So this is the setup we had last week. It was expected. Yeah. However, the market is having a range. So this one here was the sweeping of liquidity back downwards, then now heading to the liquidity heading to the consolidation move. After consolidating, now we don't know where the market is heading. Let us wait for the news to come in. Okay. So we're gonna analyze it and give you PJPY. Okay, I'm using this one. The procedures are very simple. We always go to the higher time frame and we consider the daily time frame. Why? One of the reasons why we consider the daily time frame is because we always want to know the direction of the market. Okay? Whenever you analyze the market using the daily candle, using the daily analysis, it will always show you the direction of the market. I remember last week we were analyzing and someone said that we are now selling. By then we were having like around this candle. Someone said that now we are selling USD JPY, and I was like, no guy, if you consider the daily time frame, it was showing that you are buying and you are saying you are selling. Why? So it means that some people they just cram things from different metals. You end up messing up your money. So if you come to the daily time frame, these small candles you see here, that is a lot of consolidation. If you go to 30 minute, 5 minute, 15 minute, 1 minute candle, that's a lot of consolidation that we're experiencing there. Okay, so what you should do to avoid messing up, always consider the daily time frame as your first look. If you want to analyze, always consider it. So the procedures are very simple. Always mark the highest, the nearest high. Don't go in for far. Why am I saying the nearest one? What I mean by the nearest, if you come to this one, this was 2023 October. This one here, it was 2023 October 2020 Wednesday. So it is very far. Now I'm considering this one because if you look at this current move, this was 19th of March 2024. This is very much. So we consider that one is giving us the highs. And now if I'm to also mark the low one or the lowest, depending on our rule. If you have to mark the lowest, if you look at this one, could be the one that we have. But it is also very far. This was 2023 December, 2023 December, 28th Thursday. So that is a bit far. So we're going to now consider this, either this one or this one. And if you look at this one as well, this was February 2024. It was a Wednesday. So you can consider this or you can consider this one. Why am I considering this one? Those that have sat down and studied Forex trading in different ways of Forex, I think you know some of the candle patterns that you can never miss out. If you know what you are doing, you can't pass your eyes via a certain or a given candlestick. That is only to those that gave in time and studied Forex well. So here we are. We have those two candles. Let us proceed to 4-hour time frames. We see what they give us. So if you come to the 4-hour time frame, you're gonna have something of this kind. You make your charts to be very clear. You mark the high and the low. This is USD, JPY. How many pips are there? You know, you have to calculate all that. You're having around, it is 544, 45 pips. But where the market is currently is, it is having 468 pips on 4-hour time frame. This is USD, JPY. Those days back, those who used to trade Forex trading, those pips you used to see them just in one day. Now imagine they are giving them to us on the what? On the 4-hour time frame. So as a Forex trader, I have to add in some more trades, some more lines to know, because you're having a one-sided market here. If you look clearly, we're having a one-sided market here. This impulsive move, that's a move. Now from there, they gave us a consolidation. So this is where we are in the consolidation. Now we have to know, are we still buying? Are we still selling? So if you look at the long term on a day time frame, they are indicating that we are selling the market. We are in the selling areas of the market. So we shall aim at selling the market. However, in long term, it shows that we are having bullish trend in the on the day time frames. So expect the markets to, we are looking for sales. We are looking for to have some sales. And you cannot have sales on gold, on NFP. You cannot have sales on gold and at the same time you have sales on USD JPY. No, those are correlating pairs. Then if one is buying, another one has to sell. Okay? If one is buying, another one has to what? Has to sell. So we are going to analyze this. Now from there, I'm adding another line. I'm marking winches. I'm marking this winch. It's a rejection point. That's why I'm taking it. That's why I mark winches. Basically, price has ever reached that level. But you'll find yourself that if you remove the winch, if you remove the candles, you'll see my lines they'll be pending in space, you see. So you cannot know that. Now that's why some other traders, they normally use candle closes. They mark the candle closes because the candle closes, for them, they see that the market closed from here. But as we always consider the winches, basically, because price has ever reached that level, so expect the sweep of liquidity anytime. Okay? So we are back. Now we're having this range, and now I've marked this one depending on the console on the rejection. Now I'm gonna mark where again expect the move to be, and it should also be depending on the on the rejection as well. So you can put other lines from there, or you can ignore it. You first wait for the market to first move, then you go to know. So the distance from here to here, we're having around 170 pips. So it means that on Monday we're supposed to work around 170 pips. So this is what we have. So in this area, we have given what we call the imbalances, the so-called gaps. You know, you traders who trade gaps, you know it. We have been able to measure from here to here. We're having around 170 pips. So as a Forex trader that is trading long term, you must be able to divide those 50 pips in your way to be able to know, am I selling, am I buying, this is where I'm supposed. You must be able to know where to enter from and where to close from. You get it? So since we're having the range, I'm going to mark the lowest of this range, the dealing area. We call it the dealing range in the passive strategy. So you can mark here the range, but that is far. So if you put your line clearly, you're going to see that all the ranges are sitting on this level. So you're going to mark it. You can mark it, or you can mark the winches, the lowest winch that you have. Why should I say that we mark the winch? Basically, because we expect what we call the sweep of what? Sweep of liquidity. So they might sweep up to that level. You always put it either there or below. Either in the gaps, you either mark in between the gap, or you mark, this is USD JPY, 1 hour time frame. So you can make it dotted because you already have the major lines. We already have the major lines to make your work look neat. So here I'm not marking this move. I'm gonna mark the head of the consolidation. So you can mark here or you can mark previously here. So it depends on the multiple touches or the multiple closes that we have. So I personally, I will consider this move, this switch, in between the other sweep of liquidity that we had. This was a false move, indicating that we are buying and then they give us sales from there. USD JPY, yeah? I don't know whether my guys on my live stream are seriously following. Yeah, Mr. Jamal, I welcome you. Jamal, Samuju, Mong Eriks, Adam Zidi, my student, Hassan and others, guys. Let us keep moving. Okay, so this is 1 hour time frame. Normally, what you have on 1 hour time frame, it is the same move you're gonna have. It's the same move you're gonna have on 30 minutes. If you pile up to 30 minutes, you're gonna have the same moves. I think you're seeing what I'm talking about. You're gonna have the same moves. So to make a work neat, I personally, this is what I consider. Feel free to tap the screen, feel free to give me a follow, feel free to like my videos. Those are trading prop firms. I am the king in that, guys. I have all the unknown information that you would like to know about prop firms. Feel free to ask. Feel free to join my Telegram channel. The link is in my bio for more information. Yeah, in my Telegram channel, I rarely give out signals. The word is rarely. It means sometimes I give, sometimes I don't give. In my Telegram channel, I rarely give in signals, but I share their results, indicating that you can join me where I give signals from. Okay? So, more information about prop firms that are trading on MT5, you also have to come and check me in. I'm there, and the owner will be able to be informed about prop firms by tapping my car plus button. You follow me. So this is the setup, guys, on USD JPY. The reason why I'm targeting USD JPY on long term, it's because I'm targeting 170 pips. So if you go lower than that, if you go lower than 1 hour, 30 minutes, it means that you'll be targeting around 20 pips, 30, 40. You get that? Now let us measure how many pips do we have just for this range, from where the range starts and where it ends. Let us measure and see on USD JPY. We only have 70 pips there. So it means that you are now leaving out 100. You are leaving out 100. Okay? And as a trader, I don't recommend that, guys. Always have to be able to know where to enter from, where to close from as a Forex trader. So we are still having a range on USD JPY. Now we are waiting for the move to see where are we heading. And always, whenever the market is consolidating, always don't be trapped with the manipulations. You might be manipulated and you end up being liquidated. You get it? So be serious. Don't forget to follow. Don't forget to follow. The link is in my bio for the Telegram free lessons. So my brother that is on my Telegram, we are having a lesson. It was Rahim. Let me give you the mic and tell me what is your view on USD JPY, Mr. Rahim. Tell me what you expect on USD JPY. Rahim.
For UJ,
For USD
I
JPY,
I expect price. If price comes a bit low, around on this lower dotted line, for me, I'm still bullish on it.
You're still bullish. You're right, because the market shows that we're having bulls. The market is in a bull trend.
Yeah. So I expect
It's a bull
price
trend.
covers that imbalance on that lower dotted line, then I continue up.
Yes, Mr. Rahim. So let me give out this for free. If you are to trade gold and you are seeing that gold is strongly gonna sell, then you should be strongly buying USD JPY.
Yes.
Always, by the way, did you know that you could confirm a trade on a different pair depending on another pair? Did you know that? So you must be informed, guys. So that is what Mr. Rahim is having on his view. So me personally, if I'm trading USD JPY, I will have to wait for the breakout. And if the consolidation continues, what I will do personally, I will have to go to 5 minutes and 15. That's where I'll be opening my trades from. I'll have to buy the market and I'll have to sell the market at the same time. That's normally what I do when I'm having a range. So lastly, my traders that are on live stream in the Telegram channel, guys, tell me what is your view? Anyone else to put up the hands? Yes, Mr. Hassan. Mr. Rahim, thank you so much for attending.
You're welcome.
Thank you so much. So, Hassan, what is your say? Unmute your screen and tell us what the
Okay,
expectation
thank you,
is.
Professor. My question is,
What?
how do you intervene fundamentals in your charts? How do you go about fundamentals?
Normally when I'm trading the fundamentals, what I normally do, I always analyze 30 minutes or 1 hour before the coming of the fundamental. So indicating that whenever the market is coming, I'm always having two options. I'm having plan A and I'm having plan B. Normally my plan A is entering the market where the market is, where I'm having my expectations. If it is to sell, I enter before I enter with the sells. If it is to buy, I enter with the buys. That's plan A. And if my stop loss is hit, most of the time, if my stop loss is hit, I always have plan B. Now, the plan B, I normally do it. And if you keep on following, Mr. Hassan, you'll get to know that. I normally trap the first 50 to 40 pips. Then I go against it. I go against the move. That's how you'll be able to get some snipers for the fundamentals. And sometimes that one's also risky. So indicating that if plan A is very clear for me, what I should do, I always enlarge the stop loss. Normally my stop loss is on fundamentals. I give them over 20 pips. You get it?
Yes.
So that skill of trading the fundamentals are good enough in my Telegram channel. Don't worry about that. We shall always have the analysis towards the news. When I'm free, we shall always analyze it. Don't get worried about that. Those events that are strong like CPI, NFP, and others, PPI, I'll always be in to help. Don't worry. Anything else?
Sure. Okay, thank you.
Okay. So, Mr. Sharif, you are the last person. You are the last man standing. And allow me, Mr. Sharif, kindly allow me analyze for you. GBPJPY. Mr. Sharif, let me unmute you. We discuss as we analyze. You told me to analyze for GBPJPY, if I'm not mistaken. Mr. Sharif, I'm with you.
Yeah. I'm alright.
So I stopped trading GBPJPY last year, but since I'm having a VIP, I've been analyzing it sometimes, not all the time. Normally because it's a DPY and it is a pound, so you end up being manipulated most of the time. So now you see this one turning out to be a strong opposite of the other one that I've been analyzing, the USDJPY. So if you come to the reason why you come the time frame, I've given out the reasons. Now you are familiar if I talk about it. You start with the higher time frame, and the higher time frame you are considering in my strategy, the impulsive strategy. We consider the higher time frame basically to be able to identify the trend of the market. Okay, the trend of the market. If you look clearly, the market is having a bullish move, and if you look at these last 4 candles, they showed or they indicated a loss of momentum, indicating that from there we're expecting a buy. Hope you guys, if you're there and you really started forex trading well, I know you know this. Whenever you see such moves, you see this. Let's assume this is a bullish candle, and you see bullish candle, and you see other following candles again. It's the same move with no momentum. Such moves, and they're having a consolidation format. Always expect a strong impulsive move against the other 2 candles. Simanyi Sharif akategedde nti buli w'onootunuulira ng'akatale nga kalina direction gye kabadde kaliko, kandi eziddako ne zijja, the coming of the other candles they come against the other candle. If the other ones were bullish, and these other 3 to 4 candles come in there bearish, but with low momentum, always expect a strong bullish move to come. Okay? So, you have to be observant, Mr. Sharif. Let me hope I'm with you. Remember, I'm analyzing this pair for you, Mr. Sharif. Let me hope I'm with you.
Yeah, I'm okay. I'm with you.
Okay, so we're on the data on GBP JPY. Those guys on the live stream, you can also on the live of TikTok, you can also open up GBP JPY. You analyze together. So you mark the highest. We don't have terms here that are making things complicated. Always mark the high and mark the low. That's all. So we're gonna mark this one as our lowest that was created on January 2024. Yeah? We marked it. And then you have to pile up. And remember, these pairs they're not so volatile. So you come and mark. You can mark this one and this one. If you have to trade on higher time frames, you can mark this one to be a low risk. You can mark this one to be the low risk area. You can make it dotted. Those that execute trades on day time frames, and the same thing. Then you come and mark this range. The setup is like that for daytime frame, but I'm not going to consider that because I'm looking for long term. I'm looking for short term sales or short term food. I want to execute trades on a daily basis. So I have to pile up. I refine my setup to the lower time frame. So this is where we are. Now, don't mark here because you see that the market failed to move from here. You have to first know why did the market fail. We have this range. This was the previous high that we had. So of course, it had to be a moment. So we have to, the reason why we marked here because of the other price action move that we had there. So you come to the daytime frame, you're gonna find that the move we put it's very accurate. It's very accurate for you. Now this is the way you can do technical analysis without the use of indicators. You can mark the winch. You mark the winches because most of the time those winches that we mark, they end up giving directions in the gaps in the different areas. So as we move, we always have to target. You must own a target as a display trader. You must be calculative. If you look here clearly, we have having around 3,300 pips on gold on GBP, JPY. Then if you look from where the last weight was, we're also having 240 pips, 45 pips. Then in overall, what we are targeting is around 550 pips. Okay? Are you guys observing?
Yes.
So now those are the targets we have. We are targeting 500 pips, but we are going to deal with the first 300, and then we deal with the what? With the other 250. We get to know where is market heading. Now we're having a range here. We're having a range. You also mark the highest of the range, the highest of the range. Then from there, you go to 1 hour time frame. You go to 1 hour time frame. Now, if you come to 1 hour time frame, we're going to consider these two. The range, we are going to consider the range. Remember now the other lines we first added things from the time frame. They turn out to be a backup. We shall just use them for in the case when the market gives that a good direction, either buy direction or selling direction, then we shall consider them. Okay. Now this is where we are. Now, as again, we have to measure. We have to measure this. How many pips do we have here? We have 130 pips in the range. So how are we gonna go about? How are we gonna be able to get the 130 pips on the range? Okay. So what you should do here, you move to 1 hour to 30 minutes. You have this. Yeah. So now we are looking for the low risk areas. Remember, we are having a range, but you're looking for the low risk areas. Remember, we're having 130 pips that we are looking for to trap from lower time frames, but still you have to divide them to be able to know where to enter from and where to go out from, because you might lose all the money aiming at the overholding the market, and you end up losing money. Now, I think I should not over explain myself. I've been repeating these things. We have so far analyzed the 3 pairs under the same procedures. So everyone must be aware and informed of why we are doing so. Why are we marking this area? Why? I think all answers for the whys are very clear. And then you now execute the trades on such a setup that is very easy to understand. The dotted lines, what do the dotted lines mean? The dotted lines, normally they mean, remember this is GBP/JPY. Those are the dotted lines mean the low risk areas. The low risk area. So this is how we're going to trade the range. This is how we're going to trade the range. The orange target. You just consider the other rule. Wait, by that sweep your liquidity is also there. They might sweep the liquidity. Don't mind. Just have to be protective to your setup. Yeah, so the procedure, let me repeat this one more time. Whenever the market closes above the market area, you always go in for buys. Whenever the market closes below, always go in for the sells. That will only be accurate when the setup you analyze or the setup you have is very clear. So when you have the setup that is not clear, my dear, don't be so confident with your setup if you don't know how to trade. Always go to the traders that you know that are good in trading, ask or consult from them, then they'll tell you. So my bro Sharif, on my live stream on the Telegram channel, that is the setup I have on GBP/JPY. I don't know what you have.
It's likely the same, but just it differs from, like, I never marked the first low risk areas up.
Okay, so you'll be giving me the results in my DM in the coming week. Okay. So those that are trading indices, the US 30s, the NAS 100, the DXY, and others, for those ones, I'll be analyzing them in my channels, in my special channels. So any other question, guys? There we have analyzed the GBP/JPY, USD/JPY. We have analyzed gold. So we have 3 setups on board. So what any other question could you ask me before I leave? What could you ask me before I leave? As I'm having someone here on my live stream asking me about US 30, Nasdaq. I'll analyze it, but not here.
Bro.
Yes, sir.
I was asking, how much do you charge for mentorship?
Someone's asking me about the Telegram channel. The link is in my bio, guys. Tap the link in my bio for more information about Forex trading, especially the prop farm industry. Those that are struggling there to get capital, they have your solutions, guys. And by the way, for your information, we have prop farms that are giving MT5 to all citizens of any country. Uganda, China, Japan, America, USA, any country. The link. We shall be there to inform you. My mentorship, bro, come into my inbox. We shall talk about the mentorship schedules. Henok is asking me for the Nasdaq. Nasdaq, come to my inbox also. I'll give you private one, my inbox, as long as you pass through the email link, the Telegram link. So guys of the channel, I think the lesson is done for now. I'm having no questions. Thank you for attending. Mary from USA, we have sent greetings to all our people in USA. Mary. Jonah is asking something. Mr. Jonah, what do you want? Mr. Jonah, unmute your screen and you speak up because I've given you the mic. Mary, don't forget to take our greetings to USA clients. Tell them that in the third world country of Uganda, we have an upcoming trader sending greetings to you guys. It's called the Funded King. Tell them to check him out everywhere. And on even Twitter X. So Jonah is having nothing to put on board. Guys, let us meet again. Thank you for attending. Thank you for everything.